The Firm, India's only show on corporate law, tax and audit matters.
Hello and welcome to The Firm. On the show this week, it's a big fight. FCCB holders are alleging share price manipulation by Castex Technologies. And the Supreme Court puts an end to IP forum shopping. Delhi may no longer be destination number one for IP litigation. Our top story this week, it's a rare case, if not the first one. A group of FCCB holders are alleging the Indian issuer company manipulated its stock price so as to trigger a mandatory conversion of the bonds into equity. The bondholders have complained to the regulators as well as the stock exchanges, and they are now threatening legal action in both the UK and in India. Bikes, cars, trucks, why even tractors use components manufactured by Amtech India. Now renamed Castex Technologies, the company is present in 8 countries and last year made 3,800 crore rupees in revenue and 267 crores in profits. Its total debt stood at 5,700 crore rupees. In 2012, Castex raised nearly $200 million via 2 tranches of foreign currency convertible bonds, FCCBs. The company issued 6% convertible bonds and 2.5% convertible bonds, both of a 5-year tenure and due for conversion in 2017. The conversion price was pre-decided at 103 rupees a share. 3 years later, Castex's relationship with a group of bondholders has soured. My colleague Sajeet Manghat has been investigating that story. Sajeet?
Well, Menka, a group of bondholders have complained to the Indian regulator SEBI, the stock exchanges BSE and NSE, and now they are threatening to sue the company. I spoke to their lawyer, Richard East.
Richard East is co-managing partner at London-based law firm Quinn Emanuel. He won't name his clients, but he says they are hedge funds with a significant holding of Castex 6% bonds, and they are accusing the company of foul play.
The facts are that there was a material increase in the stock. It coincided very, very obviously with the rights in the offering memorandum. This relates to the 2 sets of bonds at play here. And it allowed the company to exercise the mandatory conversion, and the stock price has gone down in price every day since that point.
The standoff is best explained by understanding the bond deed. While it gives bondholders the option to seek conversion anytime after 16th May 2012, the bond deed also allows the issuer, Castex, to seek mandatory conversion if certain conditions are met. The window for mandatory conversion opens on or after 5th April 2015 and extends till 7 days prior to the maturity of the bonds, which in the case of the 6% bonds is 6th April 2017. On the date the notice of conversion is issued, the closing price of the shares, translated into US dollars at the prevailing rate, should be at least 130% of the principal value for each of the 30 consecutive days prior to the date of notice. And that the mandatory conversion should be for all outstanding bonds and not just some bonds. And so it all comes down to stock price, doesn't it, Sajeet?
Yes, it does, and that's a twist in the case. While the Castex stock price barely moved for a year, this April onwards it zoomed. Look at the chart for the past 2 years. August 2013, the stock was at 70 rupees. April 1st last year, it was at 83. In June last year, it spiked to 131, but then declined all the way to 46 in March this year. Now look what happened to the stock starting April 2015.
On 1st April, the Castex stock price was 57 rupees. On 5th April, the window to possible mandatory conversion opened. Hereon, if the stock made certain gains, Castex could issue notice to mandatorily convert the FCCBs into shares. By the end of May 2015, the stock hit 181 rupees. That's 3 times its price in April. In order to trigger mandatory conversion, the stock needed to remain above a threshold price of approximately 170 rupees for 30 consecutive days. Between 19th June and 13th July, the Castex stock rose on a daily basis to the maximum possible limit of 5%. And though the price fell thereafter, by then the company had met all the conditions needed to trigger a mandatory conversion. On July 31st, the Castex board decided that all outstanding foreign currency convertible bonds will be converted to shares in September 2015.
That right did not exist until the 5th of April of this year. On or around that time, the shares in what was then Amtech, is now called Castex, began to rise very, very significantly, and they rose something like 3 times their original value in just over 2 months. And they rose to a level which was necessary for the company to be able to trigger the mandatory conversion rights. They rose at a time there was no significant or material news in the marketplace to justify that rise, and they rose and apparently there was no effect on the parent company's shares at all, even though the rise in the stock price suggested that the value of the Castex subsidiary had tripled in value.
From 57 rupees to 362 rupees, Castex stock price increased 6 times between April and July this year. The mandatory conversion will reduce Castex debt by around 16%. Suspecting foul play, that group of bondholders, represented by Richard East, then approached the company.
But the company dismissed these suspicions and refused to engage with the bondholders directly. In fact, they asked the bondholders to go via the bond trustee, which is Citicorp International.
They've refused in written correspondence to engage with our clients on a technical argument that the company only has to engage directly with the trustee of the bonds. We thought that was a highly technical argument, and not an argument that would be used in circumstances where the company was operating reasonably and constructively with its creditors.
Then the bondholders wrote to SEBI, the Bombay Stock Exchange and the National Stock Exchange. The first letter, sent on 10th July 2015, alleged unlawful manipulation of the company's share price. The letter claimed that if the artificially inflated price is not investigated, it may lead to the company asserting mandatory conversion of bonds. In a second letter to SEBI on the 24th of July, bondholders claimed that the alleged price manipulation will ensure that there will be insufficient trading days left before 30th July for the share price to fall beneath the mandatory conversion threshold. That forecast eventually came true. In their third letter on 31st July, the bondholders protested against the mandatory conversion notice issued by Castex. The National Stock Exchange confirmed to CNBC TV 18 that it had received a complaint and was seeking clarification from the company. The Bombay Stock Exchange and SEBI have not responded to our queries.
We understand that one of the exchanges has initiated a formal complaint process, but we have had no direct contact from SEBI. What we hope to achieve is that what the regulator will become interested in this and will investigate and will try to determine what has actually occurred, because we say that these circumstances, if in fact there has been some form of wrongdoing, and I stress at the moment this is our clients have merely raised the facts and circumstances and suggested that there's an inference of some wrongdoing. If in fact there has been wrongdoing, in our view, it will undermine and invalidate the mandatory conversion.
There's not much time left. Castex has set 10th September as the conversion date for the 6% bonds and 25th September as the conversion date for the 2.5% bonds. Besides waiting for a response from the Indian regulator and the stock exchanges, are the bondholders contemplating any legal action?
All I can say at this stage is that all remedies are being looked at. This is an English law governed bond, so that obviously raises the possibility of English proceedings. But the company is located and operates, and these conversions will practically take place in India. So that also raises the prospect of Indian proceedings.
In that interview, Richard told me that his firm would like to invite all Castex FCCB holders to reach out to them and join the fight. Right now, it's only a group of those owning the 6% FCCBs. We haven't yet heard from the 2.5% bondholders, though I must mention here that some FCCB holders have voluntarily converted their bonds to shares. So it's not clear how many will join this fight and how successful it will be.
Sajeet, in your conversation with Richard East, did he make any mention of seeking any kind of settlement with the company, any middle path option of any sort?
Well, Richard told me that all options are available with the clients, but it depends upon whether the company is going to withdraw the mandatory conversion notice first or not.
So that's the bare minimum that the clients want, right?
Yeah.
Okay, one final question. Did you reach out to Castex Technologies? Did they have any comment to offer on all these allegations made by this group of bondholders?
We did reach out to the senior management of Castex Technologies, but they refused to respond to a query.
All right, Sajeet. Thanks very much for digging up that story. Now, when we started work on this story, I thought it was the first such case of bondholders accusing a company of share price manipulation. But I came across one more similar such instance of a Hyderabad-based company. A lawyer I spoke to told me about it. If you know of any more such battles, do reach out to the firm. Here's our contact information. On that note, I'm going to take a quick break, but when we come back, the Supreme Court puts an end to IP forum shopping. Delhi may no longer be destination number one for IP litigation.